Well, hello and welcome to another episode of the Lending Podcast. We are your hosts. I'm John Burnham, along with Jeff Jones.
Hello.
Thanks for being with us again today. We've got a couple of topics we're going to touch on.
So many.
And it is spring of 2025. And a lot of our homeowners out there are receiving their property appraisal valuations from the county. It's property tax season, but it's not really property tax season yet.
Yep.
It's the notification of what your taxes may be.
It's amazing how it goes up every year.
Yes, typically.
So if you're out there and you're listening to this and you're a homeowner and it's your primary residence, which would assume that you live in it, this is the time to really look at what you're getting assessed for with the county. The county sends you a report in paper and it comes to your house and it's going to say, we now appraise your house at this value. And you're going to look at that number and you're going to go, I wish I could sell it for that price. Right. Because I got mine on Monday and it was above what the market is selling for. And I'm like, you jerks. Because what happens is you are paying taxes on that value, not the value you bought your house for. So mine was $140,000 more than what we paid for the purchase price 6 years ago.
Okay.
So our appraised value has gone up $140,000.
Okay. Which is good. That's a good thing on one hand.
It's a good thing when you sell, right? Until you sell, you're paying higher taxes every year. So I also got my mortgage statement. It says my escrow, because I closed with you.
That's right.
In a refinance in March. And so, they're redoing all their paperwork. My escrow balance is short $2,200.
Mm-hmm. Yeah, that's no fun.
So then
was it insurance or taxes or both?
It's both.
Both?
Yeah. So
we can talk about insurance.
Right. So your insurance, so obviously my principal and interest mortgage payment doesn't change for 30 years because it was a 30-year mortgage. So my mortgage didn't change. That's important for people to know. Don't get angry at your lender.
Right.
When your servicing department
changes,
when your payment changes because your taxes and your insurance. Your insurance you shop for. Okay, so you can try to shop for cheaper insurance for your home. Your property tax, you can protest. So the good news is the home buyer is in control of responding to higher costs of your mortgage payment when it's escrowed. Okay.
I think it's so critical. I've had so many conversations with clients over the years that missed this time of the year. They missed their tax appraisal in the mail because it's one piece of paper, right? And we're opening, most of us are probably opening the mail over the trash can like I do and just tossing 95% of what we're getting junk mail. And so if you miss this tax appraisal document that's coming out in your respective county, then you miss that opportunity to protest the value.
Right.
And so it's really good to, you get that preliminary appraisal from the county and check with your real estate agent. Give us a call. Like, hey, I feel like I paid X for the house last year, and now it's already increased by a number that if I could really sell it for that, I might even consider selling it. So sometimes it's lower. It does work the opposite way. Yeah. But we're really encouraging you to look at that document and do a little due diligence to figure out if the county has possibly overvalued your property.
Right.
Because the way the county appraisal process works, and it may be different from county to county slightly, but they start these valuations in January. So 3 months ago, they started valuations. Now, we can all agree, the county is not coming into every single person's house, measuring, looking at the finish out, right? They're casting a net over a neighborhood, a blanket over an area, and saying this is what we think the values have done in that area. There's just no way they can appraise every individual house. But they do have a process for trying to get accurate. And so sometimes they're fairly accurate and sometimes they're not.
Right.
And if you miss that opportunity to protest, then like Jeff said, you're paying taxes later in the year on an overvalued property. Right. And that could cost you
a lot.
Thousands of dollars. Yeah, potentially.
Yeah. So I think, and there's different ways to protest, which is nice. So you can do it yourself.
That's right.
You don't have to pay anybody. But you're going to have to send that feedback paperwork back to the county appraisal district, and they're going to want official comparables. Mm-hmm. And so sometimes realtors will help you with that. Title companies can help you with that. You can try to do that on your own. And then you're hoping that your protest is going to be legitimized
Right.
by the county appraisal district, or they can say, no, you didn't send me sufficient comparables.
Right.
That the way that I'm doing it is there's plenty of companies out there. I'm paying a company to represent me and protest for me, and I don't pay them. In this case, there's ones out there that will charge $50, $100, $200 to do it for you. This one only charges if they win, and they take 25% of
the savings.
Yeah. So for me, I just want it out of my mind, right? I don't want to have to go in front of the county appraisal district. I don't have to go anywhere. I don't have to do any paperwork. I just want to sign up for this program and go take care of it for me. And if you win, you get 25%. I get 75% of the difference.
Yeah.
Yeah,
and I want to go back to what you said about your escrow account being having a shortage, and then how it can affect your mortgage payment.
Yes.
Because like you said, your principal and interest for most mortgages out there is fixed, right? So principal and interest, that will never change for the term that you chose, and most clients have a 30-year
unless
fixed.
you have an adjustable rate mortgage.
Right.
But
adjustable or 15-year fixed. Yeah.
Rarer now.
There's not as many of those.
Yeah.
There's not as many. But what happens when, let's say you are assessed by the county here in the spring of the year, and let's say that you do nothing about that value. What the county is going to do when they finish all the protest properties, for the respective counties, the tax office is then going to reverse engineer the tax rates based on the appraisal values, because they have a budget. They have a dollar amount they're trying to get for the entire county to obviously to pay schools and pay other stuff. So the appraisals drive the tax rates. And I think that's a miss. Not a lot of folks know that. So when they go through the appraisal process, that's why it's really important to keep that appraisal down on your home, because the tax rate is a percentage. So if your property is overvalued by, let's say, $100,000, and the tax rate's 2% times $100,000, that's $2,000 a year.
Yeah. And
you just talked about how your escrow balance was short $2,000.
Yeah.
So fast forward, now it's December, okay, and the lender gets the tax bill from the county, and the lender cuts the check out of your escrow account. This is presuming you're escrowed. We have some clients out there that pay their own taxes, obviously, but if your taxes and insurance are included in your mortgage, then this is the process. The county gets the tax bill. County pays the tax bill. County doesn't really look, or did I just say that right?
Yeah, the county doesn't pay the tax bill. It's okay. You're going through a lot of people. So
Sorry.
The servicing company. No, that's fine.
The lender pays the tax. Yeah. Lender gets the tax bill. Lender pays the county. Sorry. So we'll have to redo that one. Anyway, so what happens is now your escrow account is short because the lender is not looking at how much they have in the escrow account at the time that they pay the bill. They're just paying the bill. And then they do an analysis like you just went through where your escrow account is now short. And if your escrow account is short, then you're going to see an increase in your escrow account, which means an increase in your payment.
Let's let people know what is an escrow account.
Yeah.
So an escrow account, the servicing company is going to be holding a separate, basically line item on your account. I'm trying to use a different word than account so many times. But so you have your principal and interest payment, and you got taxes and insurance. The taxes and insurance piece is your escrow account. So they are receiving payment every time you make your monthly payment. And when you look at your statement, it'll show how much went to principal, how much went to interest, and then how much went into your escrow account. And it's going to pile up and add up. So every month you're going to see your escrow account grow on your mortgage statement until they pay it, then it all goes away.
That's right.
They always need to have a buffer, right? So they need to have usually 2-month buffer in there. And so because they're paying it once a year.
That's right.
So that account only changes once a year of an out payment. And that's when everything kind of gets readjusted. I mean, and it makes sense, right? And it's usually the anniversary of your loan. So that's when they redo it, usually a month before your anniversary, to give you a heads up, hey, this is going to be short this next year. Your monthly payment will change. Or you can make a lump sum payment and offset that change. So
that's right.
They give you two options usually.
Yeah, and it can work the opposite way, where if you pay into your escrow account on a monthly basis, it accrues at the end of the year, and let's say the taxes came out and they were actually less than we anticipated, then you could have a surplus. The lender can only keep a certain amount of cushion. You talked about a buffer. That's true. They want to have a buffer. They need to have a buffer, but they can only keep a certain amount of a buffer, and it's roughly 2 months, like you said. So if you have a surplus in that escrow account, you can actually get a refund check.
Right.
And I've had clients call me and say,
gotten that before.
Yeah, I just got a couple grand, a refund check. Most of the time, it does not go that way. Most of the time, taxes and insurance tend to go up.
Yeah. Well, I mean, I got one, I think it was 3 years ago. My insurance policy went way down.
Yeah.
So that was a big difference. And that'll happen, especially if you have multiple cars and you drop how many vehicles you have.
Yeah.
Then obviously you're paying less in insurance. So that's a good change.
And I think one of the things that we do, and I say we as an industry, the mortgage industry, when we're closing a home for a buyer, we're looking at the anticipated. Yes, we're looking at what the taxes were last year, because that's kind of all we have to go on. But we're also, in some cases, looking at the anticipated bill for this next year, so we can set your escrow account up for success.
Right.
We don't want you to have a deficit at the end of the year, because that causes heartburn the following year when now you have a shortage, and then the lender's trying to recoup that money, and they're going to accelerate your payment, several $100s a month. And if you're on a fixed income, or if you're budgeted, correctly, to see that mortgage payment go up because of the escrow account, that can be pretty painful. And I've seen escrow accounts change substantial numbers.
Yeah.
So we're going to do our best to set you up for success in that. Of course, we don't know what this year's taxes are going to be exactly, but we can anticipate, pretty close. And that's why it's important for you as a homeowner, take responsibility and also look and monitor those numbers. Look at that tax assessment or that appraisal assessed value. Make sure that you're fighting that if you feel like it's overvalued. And you don't always know what's going on in your neighborhood. We're not watching every sale that's happening, around the corner from us, but we kind of have a feel. Or maybe you're checking your value online and you can kind of see it's going up a little bit or going down a little bit. That's not the county appraisal value, right? And the county appraisal value isn't necessarily what your home would sell for.
Right.
So it's really important to re-engage with your real estate agent this time of year. Certainly you can ask your mortgage professional too. Your agent's going to have more data, access to more data, and they can help you. And I think it's just something that gets overlooked. I remember kind of a horror story. One of my clients from 3 or 4 years ago, it was a single borrower, and she bought this home and she traveled a ton for work, and she missed the appraisal
protest
in the mail. And all of a sudden in December, she gets this huge bill, and now she's trying to undo it. It was tough, and I felt really bad for her. And as much as we do our best to get in front of that with you, it really is your responsibility as that homeowner to monitor that and really see what does the county think my house is worth? And if you feel like the county's undervalued your house, then you may not need to protest, or maybe it's right on the mark. But if you have any inkling that it's high, you should protest.
Yeah, and it's also a good time to double check that your homestead exemption is on there.
Yes.
I had a client, this was 2 months ago, we were texting, and she says, do you know why my homestead exemption is not showing up? And I'm like, oh no, because they bought it the year before. And so we had this whole back and forth. We even got the realtor involved, and she was awesome. And so all in all, it took her calling the county appraisal district and go, what is going on with my homestead exemption, because it went away.
Yeah. Wow.
And the nice thing is, she was able to reach somebody on the phone, which is amazing in this day and age.
That's great.
Right? And they fixed it. It was just a simple
That's huge.
error.
Mm-hmm.
Right? So when they did the year over, something happened in their system. Maybe something got unchecked and clicked. Mm-hmm. Who knows? Human behavior happens. Also software messes up.
Right.
Believe it or not.
It's like trust,
Computers aren't perfect either.
No.
So all that to say is, it just took somebody checking at the county appraisal district to make sure everything was right. But it took the borrower calling, right? And so sometimes it's as simple as calling the county appraisal district and go, why is my homestead exemption not showing up?
And there's several reasons that homestead exemption is so important. The first and foremost is you get a deduction, right, from your value. So if your property is valued, let's just say it's valued at $500,000, the homestead deduction right now is about $100,000. I think there's some talk there's in the works that they may increase that deduction, but for now I think it's $100,000. So then you're taxed at $400,000 instead of being taxed at $500,000. Right. as an owner-occupied house. You live there, right? Your homestead. And so without that homestead exemption, you don't have that reduction in taxable value. And so just quick math, again, if the tax rate's 2%, $100,000 value deduction, that's $2,000 in taxes. It's huge, right?
Yeah.
So, and then of course, if it's a second home or if it's an investment property, you're not getting those homestead deductions. And that's across the board, for investment properties and second homes as well. But owner occupied, it's so important. You gotta double check that. Now, the second reason the homestead exemption is so important is it puts a cap on how much your taxes can go up each year.
10%.
It doesn't put a cap on how much the county can value, because they can accelerate the value. We dealt with that in 2020 and 21 during COVID. We saw values going up 30, 40, 50% a year per the county. But your actual tax amount is going to be capped at a 10% increase per year maximum. So if your
they'll
taxes
have two columns when you're looking at a graph, and it'll be like assessed value, and then what do they call it?
Taxable value.
Taxable value. And so the assessed will continue to go up, but taxable value can only go up 10% year over year with the homestead exemption.
Yeah. And that resets with a new buyer buying the home. I get that question a lot. Hey, as a buyer, it's going to be my homestead. Do I inherit that cap that the previous seller had on their taxes? The answer is no. So it's going to reset with new ownership. The county's going to know the ownership change because the deed records are public record. The deed is public record, right? So they're going to know that it was the Jones house. Now it's the Burnham house. And the value is going to reset. In the homestead exemption, all your exemptions are going to reset. And then if you have other exemptions out there, if you're eligible for an over 65 exemption, that's going to save you money on your taxes.
A lot.
If you're a veteran, a disabled veteran, anywhere from 10 to 100%, there's a scale of property tax savings depending on the level of disability that you have. And there's other ones as well. I'm not going to cover all the exemptions, but
and every county can give you a breakdown of how those play out. But mainly like the 65 or better, it's $10,000 credit. So that's huge. So if you have less than 10,000, you could pay almost no taxes.
Yeah.
And then, like you said, the VA disability or the other disability, those are sliding scales. And so I don't even know those off the top of my head. You have to talk to the county appraisal for that.
Yeah, and then if you're a eligible veteran out there that has a 100% disability, you don't pay any property taxes.
Right. And thank you for your service.
And thank you for your service.
Yes.
As you shouldn't pay property taxes. Right. So that's really an interesting conversation I've had with a few of my veteran clients that did not know that. And most of them do.
Oh, my goodness.
Yeah.
Okay. That's a lot of money.
So it's a lot of money. Exactly. So really to kind of wrap this up, I think this time of year, it's spring. We're getting our property appraisal evaluations, right, as homeowners. And then home buyers out there, you're thinking about, okay, this is the home buying season. Let's look at what the property tax rates are in the area. Let's look at last year's taxes. Let's look at the exemptions that are on the house. And let's do an accurate evaluation of what your payment's going to be. Don't trust any online, this is what the taxes are on a website where it's doing your mortgage payments for you. You really got to look at the county. You got to look at the assessed value, look at the tax rates. Let us help you with those calculations so you can get your proposed payment accurate.
Right. I like it. I love it. We want to be here for you. If you have any questions, feel free to give us comments below. If you have a great realtor you're working with, they can definitely help with these topics as well. And if they don't know about this stuff, have them contact us. We'd be happy to talk to them about it because we want to provide you good information to make good decisions, save you a lot of money as much as possible. And that's about it.
That's right. Thanks for being with us.
Thank you.
All right. Take care.
Bye.